You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Simonillo. It's a great day to be talking about real estate investing.
It's always a good day to be talking about real estate investing here in the Northwest Ohio.
That's
the
right.
Greatest place in the world.
I wouldn't go that far.
When it gets warm out, it feels that way. I'm like, I'm ready to conquer the world.
Because you just fought off the throes of seasonal depression is what you did. But no, we're excited. Here's the beautiful part about real estate. A mentor of mine told me this, that despite whatever market you're in, there's always opportunity. And you got to be able to see what that is, right? Despite the headlines. And that's very difficult to do, especially if you got into real estate investing in the last 5 to 6 years, like Seth and myself. So today, actually, to jump into the real estate investing side of things, we're going to discuss an asset class that we really haven't touched on in past episodes.
Yeah, not a whole lot. But no, I'm excited. We're going to dive into some industrial conversation today. So a little bit of a different asset class than we usually talk about, but man, there's some really good opportunity there, and some people are killing it. So we have a great guest today.
So Alec, let's see here. Help me with you said you were going to change the spelling of your last
Alec
name. McElhinny.
Perfect.
Okay. Give us an introduction. Why are you here today? How'd you get into real estate investing?
Awesome. Yeah, my name is Alec McElhinny. I am the founder and managing partner of LandPlay. I do ground up flex-based projects and getting into medical office and retail. Doing my first medical office retail development. And I got into real estate right out of college. I bought my first duplex.
Classic.
Yeah, I completely overpaid for it, probably by $40K, but but that's how I got started.
That's awesome. And so,
what were you doing in college? So you said what were you doing in college?
He's smart. He's done some smart stuff.
Yeah. So what were you doing in college?
I was a math major, and I was studying to be an actuary. And what an actuary does is kind of predict kind of time value of money based on probabilities of what's going to happen. And I'd kind of use those formulas while I was in college to figure out what my net worth would be.
It sounds like you're a lot smarter than me already.
Alec, it's all about it's all about discounted cash flow analysis and those kind of things. You know what I mean?
Financial terms.
Yeah, that sounds right. But yeah, I would essentially plug in those numbers, and I figured like if I worked 40 to 50 years as an actuary, then I could have a nest egg comfortable enough to retire, and I would be 60 or 70 by that time. It didn't make sense, so I had to find another way to build a net worth a little bit quicker.
Let me pause you right there. That's fascinating because there's a great leadership principle out there. You see it in a lot of books. Everybody's rehashed it. Stephen Covey said it in his 7 Habits of Highly Effective People, and it says begin with the end in mind. That's what you did. You said, where am I going to be? You kind of reverse engineered, and you said, oh my gosh, I think I'm going to do the wrong thing.
I like how he put pen to paper and he had numbers behind it. I feel like I did something similar, but it was more like, I just have a feeling this isn't enough.
You were right. You're right. But yeah, no, he definitely got to a concrete conclusion of why and how much.
It seems like a smarter way to do it.
How could somebody do that now if they don't have a math major? How could they figure out, like, where's this going to take me? Am I making the right decision?
I think it's pretty simple. Just type in ChatGPT. How much do you want to save a year? How much do you make a year minus the taxes out, and how much of that you want to save a year, and then invest it at a 7% interest rate for the stock market. Just type that in the ChatGPT and ask what my net worth will be at 40 or 50 or 60.
What if the answer comes out a negative net worth?
Time
for a career change. That's awesome. So LandPlay started this in the last 2 years, but you've been investing for about 4 years now, and you got your start with a duplex. What was next?
Yeah, I got into residential at first because I was watching Bigger Pockets, and that's all I knew. In my head, it was either be an actuary or buy houses and try to make money from cash flow. Um, and I just kept meeting more real estate people, and I found that the people doing commercial real estate were making more money than the people doing residential. It just had less competition in it, and then the numbers are bigger. So, like, let's say you flip a house that's worth 300K, and you made 40K off the flip. If you flip a $3 million building, you can make 400K off that, for example.
Mm-hmm.
If we just apply that 10x rule
Some
there.
economies of scale there.
Yeah, yep. But honestly, with commercial, I think the margins are even better. So instead of making 400K off that $3 million flip, you'd probably making more like 800K. So I just got that just from talking to people and realized, okay, commercial real estate's probably a little bit better to be in. When entrepreneurs say riches are in the niches, what that kind of practically means is if everybody's talking about investing a certain way, like buy houses, hold on to houses, it's probably not the best thing to get into. Um, you want to get into the thing that nobody really talks about or people don't really know about because there's less competition in it. So there's more margin for you to.
Yeah, you know what's funny about that? When I started investing in the stock market, I was a byproduct of that exact kind of phenomena of like, hey, I know Tesla's making a run. I'm going to get in on Tesla. And then I overpaid for Tesla, and so, yeah, you're always kind of like, if you're hearing about it, you're kind of behind the curve a little bit. We just squeaked in on the mobile home park side of things, and that's because it was kind of a localized owner that was ready to retire and wasn't super current on pricing, but a lot of that got compressed and very institutionalized. And to your point, people are paying for it now in the multifamily space. They were paying for assets in 2020, 2021, and there's a reckoning, right? So tell us about flex space. What really, and there's a development component to this as well. It's not just finding and identifying flex space buildings or industrial buildings to purchase. It's developing them.
Yeah, I again, it's just like talking to people. Like if you talk to people enough, you could probably figure out a business. And this is for blue collar. I'm not sure how it works for like a highly specialized tech company, but for most blue collar businesses, it's pretty simple to figure out. It's not very hard. Um, so I was just talking to somebody who was doing ground up development and kind of got the numbers from him, um, went around town with him looking at some land, and I figured out pretty quick, like, oh, these numbers make a lot of sense. And during the time, interest rates were coming up, so it became what that means is that you have to focus less on businesses that have a less margin because the interest rate will eat that margin up. And with development, there's more margin in that, so you don't get eaten up as much from the interest
So
rates.
why don't we step back and talk about your first industrial flex project? Talk about what that was. Did you buy an existing building? Go ahead and give us a scoop on that.
Yeah, it started out very modest. I bought an acre of land, and I had my broker finance the whole piece.
Hold on. What? You said you had your broker finance the whole piece?
Like a mortgage broker or a real estate broker?
Our real estate broker.
He financed it for you, like he was the bank?
Yeah, and it was a girl, really nice. She's awesome. But when we got under contract, I think we got in contract for 270 or two something like that. Um, I was doing due diligence on because I didn't know anything about land. I just got this thing under contract. I'm like, all right, I got to figure it out now. I I started looking into it, and a big part of development is understanding where does stormwater management go, because that eats up a lot of land and that also costs money. When I found out I didn't need to build a
Retention
detention
pond,
pond,
yeah.
that detention was taken care of for the site. There's a big BMP for the entire park.
Oh, wow. Well, there's a couple $100,000 you didn't have to spend.
Yeah, and then it had I knew the owner said that site plans were included with the land. I didn't know what that meant, but like I started looking into how much site plans cost. That's That's almost like another 100, 150K right there. So
But were they approved already?
they were approved.
Wow, this
I,
guy
I,
teed
I
it
don't know
up
what
for
that meant, but
somebody.
I'm like, cool, we got to prove whatever that means.
So now you just cut 6 months off of the paper improvements.
We did, and site plans are expensive. They cost, I think those plans costed 60K. The MEP probably costed like 20K, and then the architectural plans probably another 20K. So
Hmm.
um, that's almost like 100K, maybe more, honestly, just to get that approved, and we don't have to
So
wait, 6 months to.
why would she? And I'm just staying at how it is. Why would she finance 100% of the land cost for somebody that doesn't know much about land?
Especially when we're talking about
70,
270K.
70 G's.
Yeah, well, I had a background in real estate at this point. I owned around 50,000 square feet of industrial and part
Okay,
of.
so you had a portfolio you could kind of point to and say, I've done this
Yeah,
before.
I'm not a complete dingus, but with land a little bit. But the more we like studied the land, like it had all utilities. The land was probably worth probably closer to 450 to 500K, and
Hmm.
we got it for 270, 280.
What was it listed at on the market?
I don't remember. Probably like I'm guessing probably like 325 or something. So we talked
Okay.
them down where they
Why was
were.
it why was it sitting if it was listed for if it was valued at 450, why didn't somebody buy it at 325?
Well, this is what I figured out after we bought the land.
Gas line was running through it.
What's that?
The gas line was running through it.
No, no. It was perfect to build. It's actually harder to raise for these smaller developments than the larger ones. Like this deal was probably all in like 100 and or 1.2 million, including land purchase.
Wow.
It was such a pain to raise for this. I have a deal right now that's just the first phase is a $4.5 million raise, and that's a lot easier raise than raising like 400K for a down payment to get a bank loan.
Hmm.
For whatever reason, I don't know why, but maybe it's also I have a little bit more experience and background, but
Mm-hmm.
um, for me, like the bigger deals you do, the easier it's to raise. And I'm looking at some bigger deals right now. And that seems to be easier to raise for than the current deals I'm raising for. So it's
So you
kind of backwards.
identified this land, you raised the 3 to 400K, and what'd you put on it?
Yeah, so it was site plan approved for a 10,000 square foot building.
Okay. Of just in warehousing or industrial, or is it office, or what was it?
Yeah, a metal flex building, four different bays.
Okay.
What was your projected rent on that?
16. Well, we were projecting $14 triple net, but we're gonna get $16 a foot.
Wow. What
Wow.
market was this in?
Fredericksburg, Virginia.
Okay.
Wow.
And is the plan to hold that asset and just rent it out, or are you gonna sell it?
So
Okay. Have
yeah.
you sold it already, or is it you still have it?
So I sold out of my shares already. So I
Okay.
sold out to a partner.
Okay. Interesting.
That's
Mm.
wild.
So back up because you kind of skipped some of the previous stuff you did. You said you had 54,000 square foot of industrial already under your belt before this project. What was
Yeah.
your first touch point into industrial?
Yeah. I so I met this guy flipping warehouses. I'm like, that's pretty interesting. I want to get into that.
Mm-hmm.
And I just like I didn't know what I was doing. I didn't even like I didn't even know how to find a good deal. So I just figured like I'm just gonna keep talking to brokers and keep telling brokers like I really just want an industrial building to flip. And please help me out. I think I talked to every broker in town. But yeah, I eventually found a group that they were trying to do the same thing and partnered with them. And
Okay.
yeah,
So kind of partnered with someone else in order to learn kind of the business a little bit and get your
yeah.
feet wet.
And they were kind of getting into it too. They've bought like maybe a couple smaller buildings, but they're getting into it too. So it was just like the right synergy at the time. So
That's awesome. So maybe for somebody who is listening to this and when they think industrial, they're thinking, 200,000 square foot facilities, large national employers, Procter and Gamble. There's obviously a subcategory of that, or even smaller applications. Maybe give somebody a pulse on what's happening in the industrial space. What do you mean by flex space?
Yeah. So industrial, there's a lot of different asset classes in industrial, and like industrial is just like a box. You can do a concrete box, a metal box, asset panels. It's just a box where you store things or have a company operator operate out of. And then you have a lot of different niches in the industrial world. Flex space is that small bay around like 60-foot deep product where you have like smaller tenants like your boot call or like a plumber, HVAC, things like that, grant tenant, who just want a little bit of space to store their stuff and operate a business, maybe have a little bit of office and some bathrooms for an employee. And that's very different from like a distribution facility. Like a Walmart might build a 500,000 square foot distribution facility with a lot of uh, dock doors that like an 18 wheeler can like load and offload like product. But those are very different products and those serve a very different type of tenant base, have very different cap rates. But it's essentially a box with some amenities.
Mm-hmm.
So
Yeah, even manufacturing. There's light manufacturing, heavy manufacturing. I mean, there are a lot of different options within that. And
yeah.
what do you think is driving the small bay industrial movement right now?
I have a couple theories on it. A lot of the old flex product gets eaten up by a multifamily developer or a lot of the flex space like used to in like a lot of cities I've seen because I've looked at investing in a few different cities. It used to be in the center of town and then that gets bought up by a multifamily developer who will reconvert that to be like a multifamily building, maybe with some retail at the bottom. So that's already getting eaten up already. Um, a lot of the older flex space product too was more lower clear height, and a lot of tenants these days want that higher clear height, around 18-foot clear.
Mm-hmm.
A lot of the older flex space doesn't have HVAC, and when you're in Austin, Texas, and it's 20 degrees, however hot it gets here. Like HVAC's a pretty big deal killer for some tenants. So just having like um, just a more modern product versus like the older product that's getting eaten up and replacing that. Also, flex space kind of ties in like industrial and office together. So let's say you're like a light manufacturing company and you have an office space here and you have your industrial spot over there. You kind of want it in one spot, so it kind of solves that issue, and it's a lot cheaper than renting out office space or a bigger industrial building.
It's
So
interesting, just observationally in our market. I remember we sold an 8,000 square foot standalone steel structure, and it had some acreage with it, and it got bought by an event venue.
cool.
Converted it, and
Yeah.
it was a
made it-
great buy for them. They
They made it
had
really nice too.
put a pond out there, and my point is though the small bay stuff really can step into even a retail component. It's very versatile, thus the name flex space.
Yeah.
And what would you encourage somebody when they're looking at a market to know if like that market is any market going to be good for flex space, or what are some factors you look for when you're looking at investing in an area?
Yeah, and this is true for any commercial product. The biggest thing I look for is how quick can I lease this product up.
Yeah.
If it takes 2 years to lease it up, you're going to get killed just holding a building
Yeah.
in the bank. How quick can you lease it up? Can you lease it for what you think you can lease it? And are other people in town building what you're building? So the flex space a product that I did out in Virginia, I would not do that. I would not do that anymore because I'm seeing that being overbuilt. That flex space built in an industrial park far away from where retail is, I wouldn't do that anymore. I think that ship has already sailed. What I'm focusing on now is finding what should be great retail sites, but don't have like a sewer line or maybe missing something that a retail like most retail sites want like I think 30 or 40,000 cars going by, but maybe only has like 10, 20,000 cars going by. That'd be perfect for a flex space product. So I can't pay as much for the land because I'm a flex space developer versus a retail developer. There's less margin for me to pay for the land. But if the retail guy can't build there, I don't have any competition buying that piece of land.
Yeah,
So
it's a flyover spot for them. They're going to overlook those things because it doesn't meet their metrics. But with your application, you can make it work.
yeah, yep.
So let's talk about what are you working on right now? What's a couple of the projects that you have in the works currently in the flex space?
Yeah, so I got a 10-acre site under contract between Austin and San Antonio. So this corridor is like the fastest growing corridor in the US. There's like 1.5 million people moving here. So you could be a blind monkey and build something and be worth something one day. So but I'm trying to buy all the land on 35 because that 35 frontage that's going to be filled up probably in about 10 years, and I'd like to own it versus somebody else owning it. And
So
it's
how are you? I mean, so you said you just bought a 10-acre lot. Are you just financing this by yourself? Are you raising money because it's part of a development that you're planning?
Yeah, yep.
What does that look like?
I'm doing a 506C for that one. And I just opened up. I haven't bought the land yet. I still have that one under contract,
Okay.
but I've had it under contract for a bit. But I just opened up investing for because I had to do a lot of due diligence to make sure that the site was good. Funny story with that one. So I got the site for a pretty good price. I really liked it. It was perfect for flex space. There weren't any deed restrictions, and that's something that when you get into development, there's a lot of things that can kill your development. That's what makes it, risky. I mean, if you know what you're doing, it's not risky, but um, there weren't any deed restrictions or tenant restrictions from title commitment, but like while doing due diligence and talking to the neighbors said they signed a tenant restriction with the current owner of the property. And I'm like, what? That was never disclosed to me. So I come to find out I couldn't build like a strip club on the property.
Oh,
Oh
I'm like,
man.
you're really
great.
disappointed
Oh,
about
yeah,
that.
I can't build a strip club. I wasn't gonna build a strip club, but I was able to get a huge discount off the land because of that. So,
Because it wasn't disclosed?
well, yeah, I
You
mean, I'm
you
not
use
that.
that as a negotiation tactic.
Yeah,
Nice. Nice. That's really, what's funny about that actually, title issues that do pop up can be a negotiation tactic. Fortunately for you, it wasn't going to exclude anything unless somebody comes along and says, I want to put a strip club here and I'm going to pay you like 10 times what the land's worth. You're going to feel like a goofy then, but it's not going to keep you from doing industrial. So you're able to use that, get a better deal, some more margin.
So you're actually raising for this land that you have under contract.
yeah.
And so what does that look like for your investors? I mean, is it you're advertising, hey, we're going to buy this land and we're going to actually develop it for flex space and they're going to stay in for that process? Or will that be kind of like a phase two and a second raise of, okay, now we're going to raise to build the flex space?
Yeah, I'm doing a phase project, and that's just to kind of yeah, I'm doing a project in 3 phases, and investors are invited to stay for two, and I'll offer another offering after phase two if they want to keep staying in. But um, phase one will be doing you want to do all the site work at once because it's a little bit cheaper. Like put all the ground infrastructure, all the pipes, all that type of stuff. And then I'll put 4 buildings up on phase one just to make sure that I can refinance for phase two. I'll refinance for phase two or get another tranche of money from the bank and put up another 3 buildings. So it'll be 7 buildings total. That'll complete our current offering. And then phase three is just 3 more buildings if they want to stay. So.
Is that a 5-year horizon to get through phase two?
It's really quick to develop flex space. So it takes about 4 months to put up those metal buildings. Actually quicker, but 4 months is a pretty conservative timeline. So
So how much is this project in totality?
It'd be probably 20 million all in, not including debt service. So
Okay. Wow. So that's exciting. I mean, is this the biggest scale for a project that you've been working on so far?
I got another one that's right now where we own the land. That one will be a little bit bigger. Just 'cause, well, we'll be building a little bit less square footage, but just because it's a medical office and retail, those pro forma to be higher and are more expensive to build. It would technically be a bigger project. So.
Mm-hmm.
That's awesome.
And for this project that you were just talking about that you got the land under contract for, are you the only general partner in this deal? Are you partnering with another group to build this and develop it? Or what does that look like?
Yeah, I'm the managing partner on it, and then I brought on two other guys just to help with some things. So
Yeah.
yeah, it's just us three.
Okay. Awesome. That's a big project. That's awesome. Okay. We are going to jump into our smaller pocket segment. So Alec, this is the part of the show where you tell us about your worst deal. I forgot to do the sound effects, so I'm going to hit that right now just so the audience knows. There we go, guys. That's the first time in 133 episodes that I've forgotten to hit the soundtrack.
Everybody had a crisis for a moment.
I had a crisis for a moment. This is the part of the show where you give us essentially your horror story in real estate. So what was a deal that went wrong? What happened? What did you learn from it?
I mean, with development, there's a lot of things that go wrong, but I'll go with this one. It was actually my first purchase. I completely overpaid for my house by like 40, maybe 50K.
And you said that was a duplex?
Yeah, it was a duplex.
And is this 2021?
Yeah, 2020, 2021, like right beginning COVID time. So they it was and this is why if you want to get into real estate, like you really have to know what you're doing. And that's why I'm sharing the story, because I didn't really know what I was doing. I was learning about what creative real estate was. Like you can do like creative things to like get a property or something. And this duplex was for sale. And I'm like, you know what I'm gonna do? I'm gonna put an escalator on it. And what an escalator is for the audience is let's say somebody put an offer for that duplex for 320. My escalator would say I would pay 4,000 more than what the next guy offered. So I'd pay 324 for it up to a certain amount. So I put my escalator, I think, for 390. That'd be the highest I paid for the property. And that would have been insane if
you were hungry, huh? You were
I'm
hungry
like,
for.
I gotta get property. I don't want to be broke.
So, but it probably, usually when you come to a duplex scenario and you're going to be the owner occupant, you can, find a little margin on the financing side of things because you're going to be able to get more favorable terms. So were you looking at that as kind of like the win scenario, not really looking at how much you could pay for the property?
Yeah, I was using actuary math and like, general common sense business math that you learn after you do a couple properties. But yeah, I was like, okay, if I'm doing an FHA loan, I'm really not really paying much down anyways. And then interest rates were so low that I could cover it if it's a little bit too high. And if I just hold it long enough, everything will be okay. And that's like the truth about real estate. If you just hold things long enough, everything's probably gonna be okay.
Time
So
does heal a lot
where's
of
that
wounds.
property at today? Do you still have it? Did you sell it?
I sold it. I had a neighbor with a exact replica of that property who just really wanted mine, and she was willing to overpay for it. So that saved my tail a little bit. And this was after the COVID inflation, so the property went up enough in value where I was somewhat.
Did you make a little money on it?
Yeah, I made a little money on it, so that was nice.
Nice. Yeah, you saw the back door and you said, I'm going to get out of here. That's awesome. Yeah. Well, you know what, though? If you are listening to this, time does heal a lot of wounds in real estate. I'm not going to say all, but a lot of wounds. And all the guys you talk to, especially, the older ones, they bought houses for like $20,000 and $30,000 that are now worth like $150,000, $170,000.
Well, it's almost like if there's one thing you can count on, it's inflation.
Yeah, that's
like
true.
Our money is going to continue to be devalued.
Yep.
And so this is what everybody's preaching with hard assets, gold, silver, real estate. Putting your money in those things because our dollar is, going to continue to be devalued. And we've seen it. I mean, I think we have enough track record now that all of a sudden it's not going to start reversing. I mean, I don't know, but real estate was definitely a lot cheaper 100 years ago.
All right, Alec, we're going to go into what we call our little nugget. So, Alex, it's part of our show here where you're going to give our listeners maybe a principle that you operate by in your business, or something that's more of like a hack that they could apply to their real estate portfolios.
I love this. This is a really good question. Yeah, I think the biggest hack is it comes down to understanding what a niche means. And a really practical way to kind of understand what a niche means in real estate is if everybody's building something or talking about something, that is what you should not be doing. You should find the thing that nobody really knows about, that nobody really talks about, and you should get your information from the source. Like you should figure out what the lease rates are. You should figure out how are the neighbors leasing stuff up. If you find information from the source and do pick projects like that make mathematical sense, not what other people are doing in town, you're going to do a lot better.
Yeah, I think another aspect to niche is market. And if you're always trying to bounce around to different markets, to your point, you're not dedicating and disciplining yourself enough to one market to understand that market's metrics.
Yep.
Yeah, I mean, usually most even bigger investors that we have seen and talked to, I mean, it's like they got their 1 or 2 or 3 markets. I mean, they're not spread super thin. They're usually in just a few areas, and they are able to learn those areas super well and build those relationships.
Yep.
Yeah.
Another thing with niche, exactly what you guys said. Like pick one market, pick one asset class, and just get really good at it.
I think part of the fear there is like, I'm going to miss out. What if I pick the wrong one? And the reality is, as long as you know what metrics you're shooting for and that market meets it, you're better off to do something than nothing, because then you'll get an action, or you're going to jump into a market you don't understand. That's really going to suck if you do that. So that's a great piece of advice. Hey, as we close here, what would it look like for, first of all, what's been the biggest resource for you in your development as a entrepreneur or a real estate investor?
The best resource. Honestly, like mindset has been very helpful. Mindset's been very helpful, and I'm trying to think who are some really good mindset people. Ed Milet has been phenomenal for me. But
yeah, I just kind of like got turned on to him a few months ago, and like he's been around for a long time. Started listening to him. He's good. He's kind of the modern day Tony Robbins.
yeah, he's so. If you can reframe, and there's a book called 2x to 10x, I think, or something like that. If you can just reframe things, and like, how can I keep 10xing? And bigger's not harder, bigger's just bigger. If you can just get that in your head, like, yeah, I think that's pretty helpful if you want.
What is 10 million amongst friends? You know what I mean? Like the big raise that maybe feels a little audacious, a little big and hairy, but you're tackling it. And here's the crazy part. There's an evolution to growth. Once you step across the boundary into the bigger deal, you realize it's the same principles that you used to do the smaller one. They're just in action with a few more pieces or at a higher level. So, but there are a lot of limiting beliefs that I think go into our reluctance to step into a more sizable deal or raise or
Yep.
I mean, at the end of the day, if the numbers work, the numbers work.
If the math will math. Alec, what does it look like for people to connect with you moving forward from this podcast?
Yeah, landplay.com. That's a great spot. I'm on LinkedIn. If you look up Alec McElhinny or Landplay, you'll find me. I'm not on social media really, other than those two. So
LinkedIn seems to be the spot right now anyway. It just seems like it's become such a big platform over the last, well, really since COVID. I mean, it just seems like the last 5 years it's gotten so much more popular. So kind of interesting.
Yeah, and I'm trying to avoid the brain rot that you'd get if are on Twitter all day or Instagram or those other dangerous ones, YouTube.
And you mean X.
Yeah, X.
You're so old. Oh. Hey,
No,
Alec,
yeah,
thank
we appreciate
you.
it.
Thanks for coming on the show today and bringing something into the forefront that maybe some of our listeners aren't as familiar with. I'm excited for you, and I'm sure things will turn out well for the deal that you got going on, man. As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.